Hiya. Okay, so this is how I like to trade with just two moving averages. And it makes money too. So let's look at this chart here. This is a chart of the Aussie dollar against the US dollar. Each of these candlesticks here represents a day's trading. And on here I've plotted two moving averages. So the gold line is the longer term moving average, and the black line is the shorter term moving average. Now when this black line crosses the gold line, so when the shorter term moving average crosses the longer term moving average, which it has here, this is when I got into the trade. So this is when I sold the Aussie dollar against US dollar. I went short here, right where the dot is on that line, and that was January the 10th, and as you can see, it's been going down ever since. As I say, each of these candlesticks is a day's trading, and it keeps going down. As we get to here, as you can see, the black line has crossed the gold line. So the short term moving average has crossed the longer term moving average. Now normally I would get out here, but you've got to have a definite break. And okay, there is daylight between the two lines, but I'll just explain my reasoning here. The fact was that one of these candlesticks here, it was actually on a Friday, and it was a Friday evening, so this actual line here didn't show us having crossed the other one until the end of Friday, and obviously that was when the market was closed. The market then opens on Sunday evening, that's UK time, and as you can see, the line is still just above the other line. So the black line is just above the yellow one, or the gold one. So that's the shorter term moving average just above the longer term. But that was, as I say, that's on Sunday evening. We go into Monday, and that's when the peak trading starts, which is 8 o'clock. So I wouldn't do anything on Sunday evening. I'll wait till the markets open on Monday. And as you can see, that day's trading actually went down, denoted by this red candlestick here. And as you can see, the lines are now crossing. So the two moving averages are crossing, or not crossing, sorry, touching. Tuesday, you can just about see under there was a green candlestick, only went up slightly, but the lines are still touching, so the moving average is still touching. Then we get this big drop on Wednesday, and now the shorter term moving average is definitely below the longer term, so the black line below the golden one. And then it started to come up here on the 29th, but we finished the week here on Friday with it starting to come up. But as you can see, the shorter term moving average is below the longer term, so the black line is below the golden line. Now I originally opened it up here, and I've moved my stop down as the price has gone down, so I'm in profit anyway. What I'll do is Monday morning I would move it down to the top of this wick, because that was back on the 22nd of Feb. Should this price hit where that wick is, then this shorter term moving average will have definitely crossed the longer term. And we can clarify all this, our reasoning behind it. If you look at the monthly chart here, this is the monthly chart. This little green one here is the current month. We're in March, just starting. But as you can see, last month, February, gone down slightly, and in January it had gone down. You can see this is a downward trend here. We go into the weekly, and as you can see on the weekly, since the beginning of the year it's been going down. It did start to come up, but the last week, as you can see, it's gone down. And you see even here, the shorter term moving average is slightly below the longer term moving average. So that ties in what we're thinking at the moment. Then we're back to the daily. And so I'm going to win either way, because I've already got my stop in here. I'll move it down slightly to the wick, but you know, this is stress free, because either way I've made money. And you know, you might say, well, maybe I should have, you know, got out here. But if I'd got out here, then you know, look, it's gone down here now, and I might lose money, because it might go down even further. That's why you've got to wait for a definite break of the two moving averages, because sometimes there's a lagging effect. Remember, we're working on the daily charts, not 5 or 10, 15, 20 minutes. With the daily chart, you've got more maneuver. And then if we look at the market data, you can see the market sentiment at the moment is 59% long. So it's fairly closely matched, but I want to be the other side of that. I want to be on the short side, because if the crowd are going long, then it's more than likely it's going to go the other way. So yeah, so that's how I see it at the moment. But we'll wait and see what happens with it next week. So I'll show you more on the next video. Thank you very much.